We do have the
wealth
number
on
crossing.
record.
Rick has the details for us.
All right, here we go. The big moment we've all been waiting for, our February read on personal income and spending and all those inflation numbers. On the headline, as Steve pointed out, expecting up 0.4%, comes in at up 0.3%. Now, the revisions aren't showing yet, but maybe as we go through the rest of the numbers, they will. Personal spending up 0.8, up 0.8. That is a stellar number. 0.8 is the best number going all the way back to January of 23. If we look at real spending, up 0.4%. That is the best level going back to December of last year. And if we look at the deflator month over month, up 0.3 as expected. And here we go. Year over year deflator, 2.5, 1/10 higher than 2.4, which was the lowest level since February 21. This is 1/10 higher than that, but as expected, it really does break a streak of numbers moving lower. Now, let's look at the PCE core deflator month over month, and that is up 0.3. Definitely less than 0.4 in the rearview mirror, as expected, and my favorite is 2.8 on the PCE core deflator year over year. 2.8 as expected, which means it remains at the best levels since March of 21. Okay, revisions are coming in now. I'll hit the ones that are most important. On the year-over-year core I just went over, last month's 2.8 now becomes 2.9, so we're actually lower. But if I was the market right now, Steve Liesman, my guess is that these numbers are generally as expected, but we're not making progress on year over year, so the markets are going to have to fight that out.
Steve, want to get your reaction to this?
Let's add to that.
Rick, you are the market, Rick. I don't know if you were the market. You are the market, man.
Today he's the only market.
It's chill on the inflation numbers. It's hot on the consumption and the spending side. As far from what I could tell, income was 0.3, but outlays was 0.8. I mean, that's blowing me away. What did you say, Rick, about real spending was up 0.4%? That's inflation adjusted.
Yes,
is that 0.4%.
Yes, 0.4%.
Diane,
exactly right.
All right, Diane, right here on TV, putting the pressure on you. Is this going to upgrade our first quarter GDP numbers, isn't it? What do you got? Can
Absolutely.
You do it on TV?
And in fact, I'm looking at the.
Do it in your head.
I'm doing in my head close to 2.5%. I'm thinking on the first quarter. So how's that for you? But I do think what's also important to remember, Waller pointed this out as well, and it's where everyone had declared victory. And Rick, you're right on the year over years, but the 3-month moving average, the 6-month moving average on all of these figures has moved up with these numbers, as far as I can tell, with the revisions as well. They've moved up. That is the wrong direction on momentum for the Federal Reserve on CPI, and with that strong consumption number out there as well. That's going to be, we already have people staking out the sort of pushback for a June cut. What's the rush? Wait a little longer. 9 of the 19 participants wanted 2 or less cuts, and it's only 1/4 point move by one person within that meeting that brings it down to 2 cuts for the year. I know that's splitting hairs, Steve, but the timing of rate cuts keeps getting moved out. We need to see a lot of improvement in terms of inflation in March before we get to a June cut, but also a big slowdown in employment.
I'm shaking my head, Diane. Diane, I'm shaking my head because I don't think this market needs to see anything from the Fed. The way they've been trading, it's been quite remarkable, right? I mean,
well, the market may not. I'm talking about the Fed.
Yes. Fed, I'm saying, right. A very significant, I'll let Rick and Brennan talk about this, but I just point out you've had a really significant reset on Fed expectations, down 300 basis points for the year-end funds rate over the course, and stocks have gone up and hit new highs in that context. And I think that's the context for everything we're talking about here today.